Welcome to Business Review, a daily program that delves into the latest and most significant economic stories. From stock markets to currency news, Business Review covers the most up-to-date developments in the global financial world.
Asian stocks rose on Friday, March 27th, as investors wagered policymakers will roll out additional stimulus measures to combat the coronavirus pandemic after U.S. unemployment filings surged to a record. Hong Kong's Hang Seng Index opened up 416 points, or 1.8%, following the footsteps of the Dow rally overnight. In Japan, the benchmark Nikkei 225 opened up 1.91%. South Korea's Kospi rose 18.90 points, or 1.12%, by 2:27 GMT. Leaders of the group of 20 major economies pledged on Thursday, March 26th, to inject over $5 trillion into the global economy to limit job and income losses from the coronavirus, and also to do whatever it takes to overcome the pandemic. Meanwhile, in Australia, stocks led losses among the region's major markets as the S&P/ASX 200 dropped 5.3% to close at 4,842.40 points. On Thursday, the 27th of March, the Japanese yen traded at 108.60 against the dollar after strengthening from levels above 110. The Australian dollar changed hands at 687 cents after seeing levels below 0.58 cents earlier in the trading week. Oil prices were mixed in the afternoon of Asian trading hours, with international benchmark Brent crude futures down 0.42% to $26.23 per barrel. U.S. crude futures also advanced 1.24% to $22.88 per barrel.
The Paris stock market fell sharply in a 3% decline after being cautious for 3 rebound sessions facing a number of cases of coronavirus, which escalated quickly in France, China, and the United States. The CAC 40 index lost 101 points, and such a fragile market opening is not a surprise in the face of such an uncertain environment where France has reached over 30,000 cases and over 1,800 deaths. The face of the French market is leaning toward an inflation. In a counterfight, President Emmanuel Macron offered several solutions to fight back France entering a dangerous economic zone, by requesting all companies to use French product in terms of agriculture to lifestyle in help of supporting local businesses and avoiding contamination from international products.
This is a crisis, a regional, local and international crisis. Everybody is involved. I don't know what will happen tomorrow. I can only tell you about present moment. We know that the French people are struggling. I know that maybe the next few weeks we might suffer from shortage of products. We are talking about months here. We might be low on products till May or July. If I do not produce enough for the population, it means I was unable to pay for the land and resources.
The real estate sector fell by 4.5%. The euro fell 0.19%, falling back below the $1.10 mark. The French government asked companies in which it is a shareholder not to pay dividends out of solidarity in these times of the coronavirus. European Union leaders on Thursday failed to agree on how best to share up economies hammered by the coronavirus, which has now infected more than 500 million people worldwide. And European stocks declined 4% as investors monitor the spread of the coronavirus, while policymakers scramble to agree on a unified response.
Au terme de ces 10 premiers jours de confinement,
At the end of these first 10 days of the confinement, it is very clear that we are only at the beginning of the epidemic wave. It has overwhelmed the Grand East region for several days. It's arriving in Paris and its suburbs, and North France regions. That's why the agreement with the President of the Republic, I announced today the extension of the confinement period for a further 2 weeks from next Tuesday, so until Wednesday, April 15th.
This is Farah Al Hashim reporting for the Business Review, KTV2, Paris.
Chinese President Xi Jinping called for countries to leverage and coordinate their macro policies to counteract the negative impact of the coronavirus outbreak and prevent the world economy from falling into recession in his address to the G20 virtual summit on Thursday. With the outbreak disrupting production and demand across the globe, President Xi says countries need to implement strong and effective fiscal and monetary policies to keep exchange rates basically stable and to better coordinate financial regulation to keep global financial markets and global industrial and supply chains stable. The Chinese president also added China will increase its supply of active pharmaceutical ingredients, daily necessities, and anti-epidemic and other supplies to the international market. It will also continue to pursue a proactive fiscal policy and prudent monetary policy to advance reform and opening up, widen market access, improve the business environment, and expand imports and outbound investment to contribute to a stable world economy. President Xi also called on all G20 members to take collective actions in cutting tariffs, removing barriers, and facilitating the unfettered flow of trade so as to send a strong signal and restore confidence for global economic recovery.
This has been Business Review, your daily source for the most critical financial stories. Tune in next time for the latest financial news impacting the world economy.